How Beyond Meat could be worth much more. What it does. Beyond Meat is a manufacturer of plant-based meat substitutes, beef, pork and poultry, and is a leading company in the plant-based meat market. Rather than targeting a small niche of vegans and vegetarians with products that might stand in for meat in a meal, the company set out to address carnivores with realistic meat alternatives in the look, cook, and taste of meat. What challenge is the company tackling? Livestock is an incredibly inefficient way of feeding humans. Environmentally, the greenhouse gas emissions for animals is considerably higher than those of plants. Beyond Meat is aiming to change this by replicating the sensory experience of eating animal meat with plant-based proteins while simultaneously driving down costs to below that of animal meat. Is the company's offering sufficiently different and better than the status quo? The current meat alternative products do not appeal to mainstream consumers because taste, smell and other sensory experiences do not match their expectation. By replicating the sensory experience of animal proteins, Beyond Meat aims to attract mainstream consumers to eat more plant-based proteins. In a survey by Kroger, 93% of the customers who bought Beyond Meat also bought animal protein, demonstrating Beyond Meat's wider appeal. Is there a committed management team? What have they done before? Beyond Meat's management team is a big attraction to the investment case. Before Beyond Meat, CEO Ethan Brown worked for the Canadian fuel cell company Ballard Power, demonstrating that his commitment to the environment predates Beyond Meat. In 2009, he gave up his well-paid job and staked his personal fortune to start Beyond Meat, long before the current trend of plant-based meat. Why does it make sense to own it? Beyond Meat's competitive advantage comes from a combination of brand, pace of innovation and scale. The company has high brand awareness thanks to its early mover advantage and brand ambassadors. As the company scales up, profitability will improve. There are numerous ways for margins to expand. Currently, Beyond Meat outsources the latter stages of production to co-manufacturers. This was done to enable Beyond Meat to scale up faster. Over time, Beyond Meat expects to insource more of the manufacturing, which will allow it to capture more of the margin. In addition, as sales grow, operating expense ratios should fall. How could it be worth many times more? The U.S. meat industry is worth $270 billion a year. We believe that plant-based meat can be a $100 billion market in 2030 and Beyond Meat can capture around 20% market share. The top line can grow 20% per annum for the next 5 years to $1.2 billion, from $465 million in 2021. Assuming a 5x EV sales multiple, the company could be worth $6 billion. This is 3x of today's value. We believe those assumptions are quite realistic given the scale of the growth opportunity ahead and Beyond Meat's competitive strength. Subscribe to my channel for more investment ideas.